If you were looking for a bounce back after yesterday's huge sell-off, you're not seeing it this morning. It's just not there. David Nicholas is with us, market guy of this Tuesday morning. That was a huge sell-off yesterday. Was it the kind of capitulation selling that says this is the bottom?
Possibly, Stuart. And I'll tell you, it is really a technically driven market, right? In absence of clear fundamentals, it's all about technicals. Technicals are driving this market. Me and you have talked about a level 42.25 on the S&P 500. Stuart, we broke that yesterday, closed below that. So again, today is very important. We need to see a nice, healthy bounce this morning for the S&P. If we don't see it, if it breaks down, if we close again below that 4,200 level, look out. 3,800, 3,900 are the next levels on the S&P. That's a good 8 to 10% from here. So it's not out of the question that the bottom's not in yet if we don't hold these levels today.
Is this really all about technicals? We've got record high gas prices. We've got inflation running crazy high. And the possibility of a recession. It's not technical, surely. It's the fundamentals of how much money these companies are going to make.
Well, Stuart, if it was just me and you trading in front of our computers, it wouldn't be about the technicals. The problem is you've got a lot of algorithms, you've got a lot of hedge funds that they have it set to really trade around these technicals. So I would say the reason that got us here was about the fundamentals. It's about Russia, it's about Ukraine, it's about the Feds. But in the moment, where the market's heading in the short term, Stuart, it is all about the technicals right now.
All right, walk away from the technicals for a second and answer this question. Do you see a recession coming this year?
Stuart, you know, I am as bullish on the American economy as anyone on your show. This is the first time where I think we actually could see a slowdown. It could happen in the fourth quarter of this year. So I'm not ruling out a recession this year. I hate to even say that, but the reality is it's the numbers. And the numbers show that we could see 2 quarters of slowing growth relative to the last couple of quarters. So it's very realistic that we could see a short-term recession at the end of this year.
So I just don't see how the market can rally substantially from here on out if there is even a remote chance of a recession at the end of the year.
Yeah. So we've changed our outlook a little bit on where we think markets will end at the end of the year. I think that this has a lot to do with what's oil going to do, right? We're talking about the price of oil. I'm not as concerned about the price of oil today as I am about the duration of oil. If we get into the summer months, Stuart, and oil is still staying stubbornly high above $100 a barrel, that could push the probability up for a recession. If food prices like wheat and corn and soybean stay stubbornly high, that's going to push the needle towards recession. So again, it's not good that we're seeing it, but it's the duration that matters.
Are you still pushing your investors into gold, GLD? It's on the screen now. It's gone up above $2,000.
You know, Stuart, we actually are buying right now. Our traders have a trade in for we're buying 5% gold just for full disclosure. We're buying the ETF, which is GLD.
Yep.
I think gold will be a tremendous hedge against inflation. It's a risk-off trade. It's like the opposite of Bitcoin, which is the risk-on trade. This is a risk-off trade. We think we're going to be in a risk-off environment for the next few months.
All right. David Nicholas, thank you very much for being with us. Difficult time to be an investor, but there you have it. That's your job. Here we go.